Reuters, U.S. stocks fell on Wednesday, after 3 days of gains, as strong inflation data fanned fears of faster interest rates hikes, while an unexpected fall in January retail sales raised concerns about economic growth. The inflation data sent benchmark U.S. 10-year Treasury yields US 10-YT equals RR to a session high of 2.8820%, making bonds more attractive than stocks. The Labor Department said its consumer price index increased 0.5% last month as households paid more for gasoline, rental accommodation, and health care. Economists polled by Reuters had forecast an increase of 0.3%. Excluding the volatile food and energy components, the CPI shot up 0.3%, the largest increase since January 2017. However, the year-on-year rise in the so-called core CPI was unchanged at 1.8% in January. Separately, a report showed U.S. retail sales decreased 0.3% last month, the biggest fall in nearly a year and a surprise drop compared with economists' Euro trademark expectations of a 0.2% rise. Euro, or in some ways you would say this is the worst possible number for U.S. equities, extremely weak U.S. retail sales and a higher CPI. I think there is less to the numbers than meets the eye, however. Euro Stephen Englander, head of research and strategy at Rafiki Capital in New York, said. Euro, or it does play into the fears that we are getting into a different inflation regime than we were before. The last 10 years was below target inflation and now the expectations are adjusting upwards, which means the Fed is not as friendly. Euro. By 9:34 a.m. ET, the Dow Jones Industrial Average (DJI) was down 0.29%, at 24,568.22. The S&P 500 (SPX) fell 0.31% to 2,654.59 and the Nasdaq Composite (IXIC) slipped 0.29% to 6,993.05. U.S. stock futures fell more than 1% after the CPI data was released at 8:30 a.m. ET. They were higher by about 0.5% ahead of the report. However, the CBOE Volatility Index (VIX), which measures near-term volatility in the stock market, initially spiked after the data. The VIX is currently near sessions lows at 21.06, and well below the 50-point mark it hit last week. Financial stocks (SPSY) were the only gainers among the 11 major S&P indexes. Banks benefit from higher interest rates. Among stocks, Fossil, FOSLO, shares soared 70% as short sellers rushed to cover their positions, a day after the watchmaker posted strong holiday quarter sales. Chipotle, CMGN, jumped about 15% after it hired Brian Niccol from Taco Bell as its next chief executive, a move that analysts called a potentially a transformational moment. Euro. Declining issues outnumbered advancers on the NYSE by 2,062 to 526. On the Nasdaq, 1,727 issues fell and 649 advanced.